Hey, Bulls and Bears, we are back with another dose of economic reality. Today is Thursday, February 2nd, 2023. And I wanted to get this video out today. I didn't get one out yesterday. Yesterday was a crazy, kind of a busy day. It was dentist day for my kids, so we take them all to the dentist at the same time. So, what do we have just here? Recently, we had a very small rate hike out of the Fed. Now, it's interesting because if you listen to the words that were said from the Fed, basically, they're saying they're going to maintain the high interest rate environment. That there's no signs or reason to cut yet. But they also said they're going to be data dependent, meaning they're going to look at the numbers that come out month by month to decide what's going to happen with rates. But it's interesting because they feel like they're winning the inflation war right now, but they're not. And let me explain that. So, if Americans are going broke, we know that savings has really plunged to financial crisis levels. That means people have very little money in savings compared to historical norms. So, if the Fed does what they say they're trying to do, they're trying to get back to the 2% inflation target. That's going to be too little too late. It's not going to help because getting back to a lower rate of increase of inflation, which is the target's 2%, that's not going to help people because people are already tapped out. They need a negative um, inflation or falling prices, right? So getting back to 2% inflation doesn't mean prices are going to correct or go lower. It just means that prices are going up just more slowly. You guys understand? Right? So their whole goal on itself is flawed. It's flawed. It's not going to help because people need lower prices. They don't need prices to keep going up just more slowly. People need lower prices. People are getting tapped out. Everywhere you look, the situation's getting worse. Rents, more people can't pay their rent. So now we have to have this nationwide rent control program that they're bringing down, bringing into the housing market, which is going to be interesting to watch. We've got the late auto loans. Those loans, late loans, are surging, and they're going to end up being in default. I think this summer is going to be a pretty wild year for that. What else do we have? We have falling rents, not falling by a lot, but definitely falling more than they did in previous years during this time of year. Now, I did some shopping earlier today at a mall here in San Diego. This is the Westfield Parkway Plaza Mall in El Cajon, and I counted at least 12 empty stores, 12 empty vacant store lots or sections. And what I'll need to do is do a voiceover here because in the mall they were playing music, and with my luck, I would get a copyright strike if the music was loud enough to be detected by the algorithm. That used to be Macy's right there. And you can see they've got a bunch of decorations on the gate to try to make it look more appealing. And there's another store. I don't know what was in there. But I counted at least 12. And a lot of the ones that are in the middle, you walk in the mall and the middle, it's out in the aisle. There's these little booths set up. I counted at least 5 of those. No one was in them. This movie theater, Regal movie theater, I believe is going to be shutting down. And I've got a few news articles up here. I do believe it's that one in El Cajon, one of the ones that are going to close. As you can see, there's many that are going to be closing down. And let's look through the list here. This is an article out of CNN here, Berkeley, Parkway Plaza. There we go. IMAX and El Cajon. That one's closing. We've got a bunch of them here in Southern California. They're closing. We see Los Angeles, Yorba Linda, Littleton, Colorado, over in Florida, Hawaii, Illinois. Wow. So their parent company, Cineworld, is going through a Chapter 11 bankruptcy. So this could be the last time that I walk by this theater when it is open. And also notice not a lot of traffic in this mall today. I was there maybe an hour after they opened up here earlier this morning. There's the empty I don't even know what they call these in the middle of, in the middle of the mall in the walk area. Another store empty. I'm not sure what used to be in there. There's another one empty back there. That used to be a coffee bean. I used to go there, Coffee Bean, because I was tired of Starbucks. So I remember I used to go there on purpose. They actually have a Walmart back in this mall. So I used to go to the Coffee Bean. There's another empty one. I don't know what was in there. I wasn't a big visitor to the mall. I'm not a big shopper in general. But going back a few years, I don't remember that many vacancies. There's another one back there. That used to be Sears. I do know that. So you would think that a store, because Sears, it's been at least a couple years since that bankruptcy. You would have thought that another big store would have came in there. That is closed down. I'm giving the thumbs down sign because these are closed down. I guess there's a radio station that broadcasts from there every once in a while. That's what they'll do. They'll find temporary things to fill up these spaces, temporary businesses. Another empty one. Oh, the Navy. The Navy moved into that one. So a naval recruiting station. I think that used to be a store though, because I don't remember that being there. There's another one. Not sure what used to be there, but definitely a lot more vacancies than I remember in the past. Here's one. They try to put things on the windows to try to make it look more appealing. They try to make it look less vacant. There's another one just a couple spaces down. Now, the movie theater, that's not really a sign of economic weakness. There's another one. It's more of a sign of a lot of people streaming. But why are more people streaming? Because the movies are so expensive. So I guess you could look at it as an economic sign or signal. Tax preparation place moved into that one, so they won't be there for very long. It's just tax season. So that's going to be temporary. So I'm thinking that's going to be another empty one here in just a few months. There's another empty one right across from Five Below. Five Below is thriving pretty good. It's everything is $5 or less. So that's what people are looking for, discount stores. So another one back there. They've got decorations in the window to try to make it look less empty. All right. Now, also, real quick before we move on, I want to give a big thank you and a shout out to a DJ over at the radio station, WCBN, out of Ann Arbor, Michigan, DJ JoJo. Thank you very much. He had me on his show to talk about the economy and some other things, but mostly about economics. And it's a college radio station, so we'll have to get that out. I think hopefully we'll be able to post it here on this channel. I'll let you know when that is out, and I will try to put it up here for you. And we talked about some things in there that I don't really talk about a lot on this channel. There's a lot of things we talked about that I do talk about on this channel, of course, but some dived into some other areas. So I think it'll be interesting. And I just really want to thank DJ JoJo for having me on the station over there. Also, another sign that the economy is turning is more layoffs. We have PayPal out there announcing about 2,000 people getting laid off. We also have another pretty big announcement out of FedEx. FedEx is going to be laying off 10% of their management workforce, 10%. And it was interesting because we saw FedEx lay off people last fall, and we said that was pretty interesting, especially going in to the holiday shopping season, that FedEx would be laying off. We also see orders for cardboard are way down. So apparently people are shopping a lot less online because we know that pretty much everything that gets sold on Amazon is coming out in a cardboard box or container. Not all of them. Sometimes they'll just send it in a padded envelope. But even small items, I've ordered one small item before. It was like this big, and they sent a huge box with a bunch of padding around it. It wasn't even a fragile thing. And this is the headline over at Freight Waves that they had out about it here. Cardboard box demand plunging at rates unseen since the Great Recession. So there's another stat or piece of data that points to another fact here that things aren't going in the right direction here with the economy, and something else that's now worse or as bad as it's been since the Great Recession. Markets Insider also had a headline here: cardboard flashes economic warning not seen since 2008 crisis. Seeking alpha, demand for cardboard and paperboard is suggesting that growth is declining at a recessionary pace. All right, folks. So, what do you think about that mall? Is that an unusual amount of closures? At least 12 stores empty. What do you think about that compared to maybe your local mall? Please let me know what you think down in comments. But now we've got these other things all adding up here, and the layoffs here in January have been astronomical. And I predicted this, remember, back in the fall shopping season when we saw the layoffs happening with Amazon and other retailers and FedEx again, that things were going to be really bad here in 2023. Take a look at the recession, the 2023 layoff numbers, rather, from January. All right, this chart here speaks 1,000 words, in my opinion. Take a look at January. This is just last month compared to the previous months, going all the way back to March 2022. And we told you right here on this channel that 2023 was going to be the year of layoffs. And so far, January does not disappoint. Not to make light of all the people losing their jobs, of course, but this was highly foreseeable with the state of the U.S. consumer right now, really just under loads of debt, and with the economy dependent on consumer spending, we're going to see just more of the same. Look here, we're just up February 2nd today. We already see 2,500 layoffs already in February. So February already, by the looks of it, is on pace about 1,000 per day. Actually, it wouldn't be as bad as January, but it's still looking to be pretty bad either way you look at it. January, over 107,000 layoffs. And you see the company logos there, Amazon at the top, got Google, Microsoft, looks like Salesforce, IBM down the line there. All right, and this is just in tech. So just think about all of the other sectors that are not included in here. And we know we've got a bad one on our hands here, folks. Next, we've talked about for a while now how year of bankruptcies. We talked about Regal Cinemas just earlier, Chapter 11 bankruptcy, reorganization, closing many locations, including the one that I just walked through earlier in this video. Also, as of the end of January, just last month, we see the most large company bankruptcies since 2010. All right, so another piece of data going all the way back, the highest since the financial crisis era. 2010 was the start of what they call the economic recovery. What it was massive money creation, rock bottom interest rates, cutting rates all the way down to near zero. And here we are today after that so-called recovery under just mountains of debt, most consumers under mountains of debt, government, cities under mountains of debt, the country under mountains of more debt. We're in the trillions of dollars now just in the interest alone, paying down the national debt. It can never be paid off. So they always have to keep borrowing more, printing more, raising the debt ceiling just to keep this whole thing, this whole house of cards from falling down. And the longer the powers that be kick the can down the road, the worse it's going to be for the consumers. So as we always say, strap in, buckle up and get ready, keep stacking. Hard assets is going to be where it's at the end of all this, but there's going to be a lot of turmoil, a lot of pain to go through until then. Also, another piece of news that I read here is that gold demand in 2022 hit an 11-year high. So people are asking, why isn't the price taken off? Why isn't it surging? Well, that's because they're manipulating the price on the paper markets or on the digital price that you see, when you look it up on the computer, when you look up the price, they're beating that down to keep the physical price suppressed. And when it gets cut loose, folks, gold, especially silver, is really going to skyrocket, in my opinion, especially after the dollar completely gets destroyed and gets put into oblivion by all these countries now going outside of the dollar. You know what's going on with that. Keep stacking, folks. Thanks for being here. Big love. Bye for now. We'll talk to you soon, and peace.